There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Tuesday afternoon, and this is the COB. Great to be here with you. I'm Nadine Blaney.
I'm Juliette Sarli, and today, Nadine, of course, a lot of focus on what we'd seen on Wall Street. Woke up to those records again, the big Nvidia boost as well. But let's have a look at what we saw on our local market, and it was a bit of a choppy start, but we finished higher by about 0.5%.
Yeah, so we will continue to keep an eye on this. So we've got US futures also lifting their socks up. It's amazing. I don't even feel that excited. I mean, finance nerd, I used to get a little bit excited when there was a record on Wall Street. Now it's like, and another record finish on Wall Street.
Well, what it reminds me of, and maybe we can ask our guest Martin Crabb about this in his thoughts later as well, is, 2008, where it was like yet another record high, yet another record high, and then we know, of course, what happened not long after that.
Ooh,
anyway,
very dire.
Let's have a look at some of the themes of the day. And we certainly are looking at shining bright here, because it's all about the gold players amidst the record high momentum that you have been seeing in gold.
Yeah, it's incredible, actually. I put a call in with ABC Bullion, see if we can get some gold in studio with us, because, the physical stuff is the best, isn't it? Myer, discount, anyone? I mean, that was a huge fall in the wake of an update, which has really called into question its ability to become a major online player. Of course, some of the losses had to do with that acquisition of apparel brands from Premier Investments, but still, although the trading update for the first 6 weeks of FY26, we're not looking too bad with like-for-like sales up by about 3%.
And then inflation anticipation, of course, we are awaiting the August CPI print coming through tomorrow, the last sort of key piece before the RBA meets next week. No changes we're expecting from the RBA next week, but it was interesting to talk to Justin Smirk from Westpac today. He was telling me they still see 3 more rate cuts
this year.
Cycle.
Or this cycle. Got it.
Yeah.
You can find that interview online at ausbiz.com.au. Yeah, Justin Smirk came in here looking very dapper today in the sunshine of Sydney. Gold, I mean, the sun really is shining on these gold plays. Of course, it's not uniform how we see these companies react. There are often idiosyncratic stories in terms of production or, production pauses that are coming through from these companies. But generally speaking, it's been, a really strong start to the week for the gold names.
Yeah, let's have a look though at some of the miners, because we're watching iron ore very closely as well. So BHP and Rio looking good. When we look at some of the others, I'll have a quick check at what Fortescue did today. It was down by 1.2%. So not broad-based gains, but certainly those iron ore futures have been in focus, holding around $106 a ton.
Yeah, let's look at the retailers just quickly. I reckon that Premier Investments, which we also, I think, have on this list somewhere, is falling in sympathy with Myer, which, of course, is down by close to 24%.
And we should point out with Cettire that is up 19% because the founder bought more shares.
Ooh, it's a change there. All right, so we've talked about Myer already. Telix Pharmaceuticals, it was a stock of the day on the call. You can find that online. It's received a reimbursement approval related to an imaging agent for prostate cancer. So Philip Pepe from Shaw & Partners was on with me earlier, and he said there were 2 strikes against the company, and it's dealing with regulators. He said they really can't have another strike. Well, they didn't. Today they got a tick, and that's why you're seeing the share price rise about 9%.
And Droneshield, look, it hit about a 4-week high, expanding its R&D operations in the US. For newsletter readers, Mark Gardner from MPC has an interesting piece on that stock this afternoon.
Ooh, in the COB newsletter. If you don't have it coming to your inbox, I don't know why. Macquarie has maintained its underweight stance on the banking sector, but does say that ANZ and NAB are its preferred exposures, and ANZ's price target lifted to 32.50. Well, it's at 33.32, so make of that what you will.
All right, let's welcome our Tuesday guest for the first time in a little while, because then you're going on the road, Martin Crabb from Shaw and Partners. Answer my question that I was saying to Nadine. Are you sort of a bit fatigued by these records on Wall Street, or?
No, I love record highs. I'm a huge fan of record highs. It was interesting you were talking about back in 2007. I remember this feels more like the late 90s, so showing my age a bit there, but we're in the middle of a massive infrastructure build that no one's seen before, because it's in an area that is completely novel, which is artificial intelligence. So the amount of capex that's going on, a $500 billion deal announced between OpenAI and NVIDIA last night. So NVIDIA really throwing its weight around, because there's a 20-month wait list for the Blackwell processors. So if you want to get moving, you need to get into bed with NVIDIA. So OpenAI obviously smart, but this feels like the rails that were being built and all of the computing that was being built and all the poles and wires that were being built for the internet rollout. We had WorldCom and everyone digging up the streets of Sydney, laying cable everywhere. There was a massive amount of capital expenditure that went on, and that created a bubble eventually. But the market went to trade on 70 times earnings before that blew up, because I'm not this old, but the railroads, the big build out of the rail infrastructure that happened during and part of the Industrial Revolution was massive, right? So these sorts of infrastructure rollouts, they consume a lot of capital, so they need sort of booming capital markets, and that's exactly what we've got now. So I don't think we're in the late stages of this. I think we're in the early stages of this. So this is just going to keep pushing the market higher and higher, because you don't have to worry about earnings. It's all about capital expenditure and who's spending the most money. So we could see a lot higher share prices before we have to worry about it.
Yeah, well, speaking of things pushing higher, small caps are amongst those. It's really an interesting dynamic, because while you have the top names in the US really driving sentiment, here we don't have that big tech exposure. So we can look to some of our smaller companies for this outperformance. And, it really feels as if we're at an inflection point in the small caps. Do you agree?
Yeah, there's a couple of things going on here. One is, as central banks are lowering interest rates, you do get a little bit of animal spirits, and you get more focus on growth. And so you do tend to get small caps starting to trade at a premium to large caps. So I sent through a chart, which is just looking, the grey areas are the direction of interest rates inverted. So when that grey bar is below the line, that's rates being hiked. And during those periods, the PE relative between large caps and small caps sells off. So when the central banks are tightening, you can see that the PEs compress. No one wants to be in small caps, so they sell them off. When the central banks, and this is the Reserve Bank, is cutting rates, so when those grey bars are above the line, that's when you see the re-rating. And typically small caps will trade up to a 30% premium to large caps when money is being when financial conditions are being loosened, and that makes sense. It's A, these are growthier companies, people are happy to pay more for them, and B, the central banks are releasing animal spirits when they cut rates. So we're at about a 9% PE premium, so small caps are at a small premium to large caps. Remember, our large caps are things like banks and miners, which don't typically tend to trade on big PEs anyway. So I think we're at the early stages of that. Now, last month, I think smalls outperformed bigs by about 6 or 7. This month it's about 3 or 4. So we've already had 10% outperformance by small caps in 2 months. But again, that's a trend that can go significantly higher than here.
Okay, so I've had a few conversations about small caps just today even, and I haven't been on air that much, but you're still looking for quality. Do small caps, in your worldview, have to be profitable?
Not necessarily. I mean, my approach to small caps is to hire managers. I think it's a really specialist feel of the market. There are thousands, literally thousands of listed companies. So I'd prefer to pick a team or a group of teams that have the resources and time and experience to go and sift through those thousands of companies and find the 40 or 50 that they really, really like. And there's also a huge premium on management. Like, you can have a really good business, but if it's not managed well or it's managed poorly, there can be a lot of destruction of shareholder value. So I think as an investor, you have to have time to meet the management, have an assessment of them, maybe even meet the second line of management, maybe talk to competitors. There's a lot of work you need to do to assess management. It's worthwhile doing it for big companies, but for small companies, again, because there's so many, that's a lot of shoe leather. So we met all of our small cap managers last week. On average, they're making 500 or 600 meetings a year. So who's got time to do that? I don't have time to do that. So I'd prefer to pay a management fee and have teams of people. I won't mention on air who they are, but you know who you are. That we choose to manage our small cap portfolios for us.
Well, let's go large and the rebalancing on the ASX 100, which has brought in more gold players.
Yeah, this is interesting. So I'm a bit of a fan of how the index producers move stocks in and out. Sometimes they create a lot of value by putting small caps into the index to create this sort of rising star effect. So as a company grows, it becomes large enough to go into the 100, and so mid caps in Australia tend to do quite well. So I've kept pretty close. This is not 100% accurate. It's pretty close track of how many gold stocks have been in the ASX 100 index going back to 2000, which is pretty much when S&P got together with ASX to create these indices. And the maximum I ever had in the past was 4. And as of the rebalance early this week, where Genesis and Ramelius were added on top of Perseus back in June, we've doubled the number of stocks in the gold stocks in the ASX 100. So now we've got 6 to choose from, which again is it's great for investors that in the large cap end of the market you don't just have to pick Northern Star or Newmont. You've got a bit of choice. But B, it also shows how important gold stocks are for Australian investors. Now we're really used to gold. We talk about it almost every day, right? Materials is less than 2% of the world index, and gold is like 10% of that. So gold is a very, very small part of the global capital markets. So very few fund managers overseas even look at it. No one's got a gold analyst. Like if you go to Capital or Fidelity, you might find a gold analyst amongst their 1,000 analysts, but most fund managers don't bother looking at it. So I think Australia's got a really strong competitive advantage. 15% of our small ordinaries is in gold, and now we've got 6 in the top end. So there's more money, more resources, more time being spent looking at these companies. And based on where the gold price is trading at, they still look really, really cheap. So again, I think this is early in the innings for gold, gold stocks in particular. I don't think we're late. I think the idea of having some gold bullion in the studio is a fantastic idea. Yeah. Let me know when you're doing that.
Okay, we'll do. We'll bring the wine out as well. So I guess the gold inclusion also solidifying our market capitalization bias towards miners and banks. So I wonder what that does to international flows as well. But let's park that, because we'll get your prediction for the RBA next week. No, Kat?
Yeah, I think that's an easy one. I don't think anyone's got any movement at all in either direction priced in. I think it's pretty clear that based on what Michelle Bullock's been saying about interest rates, Governor Bullock's been saying about interest rates, they want a bit more data. They are getting a monthly inflation read tomorrow, but as we know, these monthly inflation reads don't cover all the basket. They're also going to want a bit more data on inflation. The last labour numbers we had were terrible, right? We had fewer jobs created last month. There are 2 more labour force numbers coming out between here and the November reading. So I think they'll wait for that. So they'll wait for the quarterly CPI, and they'll wait for 2 more labour, and they'll go in Cup Day. So next week's a little bit of a nothing burger. Having said that, the Reserve Bank has surprised the market before. So never say never, but yeah, I think my prediction is no change, and I think I join the majority of economists with that view.
And given she spoke yesterday, I don't think she's going to do a 180 within a week, right?
Well, you never know.
You never know.
It is a committee after all, but I wouldn't have thought so.
Well, they're obviously going to wait for you to come back from your big trip around the country, meeting all the people you're going to meet.
Yeah.
Shaw and Partners people. Say hi to Martin. You'll be back 11th of November.
I'll be back on Ausbiz on the 11th of November.
Okay.
That is a long time between
I
drinks.
Think that is quite rude.
My goodness,
Yeah,
we'll miss you.
We'll miss you too.
All right. We'll see you on the other side, though. Martin Crabb from Shaw and Partners. So I think this is the time that we take a look at the stock of the day,
which was Telix Pharmaceuticals, and you spoke to Philip Pepe from Shaw and Partners and Rudy Philippek Van Dyke from FN Arena.
It is materially cheap if you believe analysts' forecasts, because analysts haven't fully followed the share price down. You had a very well-regarded analyst who changed firms, reinitiate, which was also helping to fuel the buy call. So I'm going to call, having previously called it a hold, I'm going to call it a buy now, because it was a positive announcement. If they can string 2 or 3 of these together, it's not up 5%, it's probably up 60, 70, 80% according to analysts' price targets. So the price from here is large, but they need to back this up with another positive announcement. Fingers crossed that they do.
It probably won't be in a straight line, and it's your own decision whether you focus on the share price, which can be quite volatile, or you focus on the business underneath the share price and what could potentially be achieved. And if you opt for the second scenario, then you stop watching the share price every day. You just own your portfolio. But don't put too much money in there, because obviously it's not without risk.
All right, let's have a look at the leaders and laggards as we round out the day's trade. We touched on why Droneshield is moving higher, rare earths stocks also looking good. And of course, we got into detail with Telix Pharmaceuticals and those gold players still looking really good, Nadine.
Yeah, really interesting that we've got all of those gold plays now within the top 100. And if you're interested in a little bit more about how these indices are made up, I just had a conversation with a gentleman from Dimensional Fund Advisors, and he was talking to me about the makeup of the Small Ords Index and why you shouldn't be fooled into thinking that the way these indexes are constructed are necessarily reflective of what you want to invest in as a small cap investor. Anyways, I don't want to give it all away, but that's up online. So what was a laggards today? I think Volt, all day Volt's been on the list, and it's down by about 4%. It did have its target price cut by UBS and also cut to neutral from a buy.
And you mentioned Premier being dragged down with Myer. And I should point out with some of those REITs as well that are there, they were on David Lane from Ord Minnett's watch list, and he came into the studio today. It was nice to see him in real life.
Yeah, all right. Leaders in the small to mid cap space, Cettire. You mentioned why, up 18% on some director buying. I don't know a lot about these other companies. I'm not ashamed to admit. Boab Metals, don't know if I've ever said that before, up by 16% to 44 cents per share.
And to the downside in the small end of town, Mindax is there off 11%, Gold Hydrogen down by 9.3%.
Yeah, Vectin Technology is interesting. We'll be speaking with that company tomorrow. Yesterday they were out with an update. And a guest here said that I should take a closer look. He said it's a pretty interesting company. So we'll do that tomorrow with the company. And Clover today came out with a bit of an update. So the market not responding positively to that at all.
All right, tonight, global PMIs continue. We got ours today. The US composite could dip slightly. Fed Chair Jerome Powell delivering a speech, and Micron Tech and AutoZone come out with earnings.
Yeah, I was just speaking about Micron with a guest as well, about its Bitcoin holdings. We'll see. The share price has come under a bit of pressure as of late. Almost a meme stock, that one. Very much a play on Bitcoin. Tomorrow, we get the CPI for the month of August. So that's inflation, of course, could ease to 2.7%. And KMD, so the old Kathmandu earnings are expected, and it's in the retail space. Look, it's been having a bit of a tough time, so we will see. And if Myer is anything to go by, all is not well with all retailers here in Australia.
No. All right, let's have a look at how the local market has finished. There has been some buying there, up 0.5%. Don't really know what happened between 10:30 till 12. Maybe a couple of people pressed the sell or snooze button, but it's a good finish, up 0.5% today on the back of those records being added on Wall Street. And we'll continue to monitor all those moves in tech players, particularly on the back of what we saw with Nvidia. And also worth noting that the shares of Kenvue, the maker of Tylenol, fell some 7% yesterday as well on Wall Street. So continue to watch those pharma stocks after those claims from the Trump administration about Tylenol and potentially a warning for pregnant women who are taking it.
Yeah, so Tylenol, obviously paracetamol in the US, it's sort of the brand name synonymous with it. Interesting times we're living in. Look, I hope everybody has a wonderful evening. We're watching Asian stocks. Yeah, a bit touch and go if you look at Hong Kong's market, down more than 2%, but gold hitting another peak. Let's see what the night brings.
We'll see you tomorrow from 9:45 a.m. Eastern.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.